about 4.5% higher. Abhiram, Eleswarapu is head of India equity at BNP Paribas India. Is joining us right now to take some questions. Abhiram, good to have you with us here. Thanks very much for your time. Are you headed to a PVR near you to catch any of these movies, Abhiram? I don't think Abhiram can hear me.
All right.
I think the frame is frozen. We had Prakash on the phone. This is rains, I think. We'll have Abhiram back with us in just a bit. The market, if I just want to go back, is at the day's low actually.
Yeah.
245 points down. Yeah, we're pretty much kind of sinking a little bit here. 19,728 is where we are. And the day's low, and 19,733 is where we are at. I think it's the same combination that we were talking about. Pull up Infosys, that will account for a large chunk of the cut that you're seeing. 100 clean points, by the way, is on account of Infosys. Maybe it's a little bit more. Let me just refresh this. 110 points coming in from RIL. Reliance adding about 70 index points. That's 170 between them. And then you add a TCS and HCL Tech, and that's another 35 odd points. So these four names doing bulk of the damage. Abhiram is back with us on the line. Abhiram, I was just asking on a lighter note, are you headed to any of the PVRs or other movie halls nearby to catch any of these movies?
Well, I'm looking forward to a good long weekend, and I wish the same for all of you. And maybe that includes a movie too.
Now, to the theatre, or we'll wait for the OTT? That's the big question for these exhibitors, isn't it?
I agree with you, but I think that OTT is a significant competition. We were actually looking at the space briefly, and there is no doubt that it's the content quality as well, and also the straight competition from OTT. So these are two big factors to watch out for footfalls to return to theatres.
Abhiram, afternoon. Reema here. I'm sure you can guess my question, right? IT, you both of us have been tracking IT for a very, very long time. What have you made of this guidance cut by Infosys? You must have interacted with the company, right, between Q4 and Q1, because typically, you do end up chatting with the managements to get a sense about the demand, the inter-quarter update at conferences, etc. Did you, at any point of time, expect that the company is going to come out and slash the guidance like this?
Well, I can obviously comment from an overall sectoral perspective, and let's go back 3 months, and the story has not really changed in the space, which is that deal wins have always been strong. It's just a question of how they convert, and the start dates of those deals could vary between company and company. So last quarter revenue growth wasn't great. This quarter it hasn't been great either. I mean, across the board, to be honest, and it just having a result like this, I mean, the season that happened for IT so far is not entirely unexpected, let's face it, given all the headwinds that were happening. But we were kind of seeing through this and looking for the next 6 to 12 months to see these deals ramp up. And of course, all these companies announced some mega deals in the last 1 month or so. So I do think that stocks will bounce back from these levels over the next 6 months or so. Now, in terms of guidance cuts by various companies, I think it's very much dependent on their own deal positions and when those deals start to kick in and how you build those revenues from those deals into your guidance. It may just be the case that you have a couple of months where many of those mega deals don't kick in, and that seems to be the reason behind the outlooks of these companies.
Hi, Abhiram. Good afternoon. Good to speak to you. Abhiram, what about the banking names? What do you making of them? I mean, there will likely be some kind of NIM compression, but I think the markets are factored that in, right? How would you approach it between private as well as public, and would you look at mid-sized banks?
Yeah, I think the NIM compression angle is kind of known. It would probably happen, and whatever it is would be a little bit only. I think the real story is about credit growth across the sector, and also the quality of that credit. And I think by and large, companies are holding up really well. I really haven't seen any red flags. If anything at all, we've only seen an improvement in the on-the-ground conditions for companies. Balance sheets have still only gotten better. So by and large, if there is one space which I think there is still room for upside, It's actually financials. Now it comes down to whether it's large versus small. And within this, of course, it's all really company specific, but by and large, we prefer the larger private sector names. And just on that note, just before coming here, I was looking at stock performances and sectoral performances. And one of the things that struck me was that the Nifty is probably up about 15% or so from its lows, let's say, towards March end. And the small and mid cap space actually is up 25 to 30%. After such a one-sided rally, it's normal to expect some amount of cooling off or consolidation. So if you were to kind of bias your portfolio from here on, I think it would make a lot more sense to look at the large caps.
Any thoughts on commodities, Abhiram? Will they? That's the only space where there hasn't been really any FOMO, right? I mean, overall, because of China, etc., etc. You think that's left to be done? It'll get done or no?
Well, actually, it's kind of think of this in a slightly broader perspective. In addition to commodities, I would say that it's actually all globally linked names that have not really done well in the last 3 to 6 months, especially the last 3 months or so on a relative basis. So I would obviously be looking at that at all of these names with a much finer lens, so to speak. On commodities per se, I really don't have a very strong view, except that our house call is that oil prices will go up and will probably end somewhere in the upper 90s or mid 90s, let's say, to the barrel by the end of the year. So that would suggest that there's probably some upside to this. And it's all obviously predicated on tighter oil markets to start with. So I'm not sure that they're factoring in a significant pickup in demand from China or elsewhere. But even if that were to happen, maybe there's more upside. So overall, on oil, we think that the market may be quite bearish and the prices may actually go up towards the end of the year.
Abhiram, do you like the entire home improvement space? Cables, wires, tiles. These companies have been reporting good numbers. The stocks have rallied. The valuations have gotten re-rated. Are you comfortable buying them at current levels? And if yes, which pocket segment?
Well, I got to say that we missed the cables and wires segment. It's done really well, hasn't it? And I think that we obviously focus a lot more on the input costs, such as copper prices and so on, because it's a pass-through in some of these spaces. And we thought that maybe copper prices will start to fall, and as a result, the top lines may suffer. Whatever be the case, these companies have obviously outperformed. They've done really well in terms of execution, in terms of how they handle their margins and so on and so forth. But now that we've missed that, I really don't see any point in chasing it at this stage. The stocks have done really, really well. It's at least the cables and wire space is not the area we're looking at. But durables as a whole, there's some areas I think where there's still strength. There are more diversified players in the consumer durable space, and I think we'd focus on those for the timing, just as we've done through the year so far.
Abhiram, let's talk about the old economy, the cement stocks. You know, everyone is bracing for some improvement. It seems it's not going to be a quarter one story. It'll have to be a quarter two story if there is signs of that EBITDA per ton improvement. Because two large names in the last 24 hours, Dalmia Bharat and Ultratech Cement, and both of them have disappointed. You know, the stock reaction on Ultratech is only down close to 100%, but the whisper number was maybe they will disappoint, and Dalmia was a clean miss out there, close to around a 15% miss. How do you approach this space? If India is going to be growing, we're going to be doing well in the future, then cement's going to be required. But that's not the play.
I absolutely hear you. I mean, if you're looking at it from a 3 to 5 year perspective, then I think it's a good time to start looking at the space and adding to it. I mean, there are obviously two angles to this. One, of course, is the overall real estate market, which is doing rather well still, especially the more affluent side of it. And the second bit is overall infrastructure spending. There's just one little caveat on this, which is that as you approach the election phase, closer to it, things tend to slow down a little bit, and overall order flows tend to slow down. And we've had a sharp run in order flows across various sectors, right, going into this phase. Normally, this tends to slow down a little bit to the second half of the year, and maybe that's what is an opportunity to do more work on these names and potentially add them from a 3 to 5 year perspective. But I agree with you that once companies disappoint, then you got to see when the turning point is. And frankly, I don't have one. I'm not even sure it's 2Q But maybe towards the end of the year is when we start looking at the space a little more.
Any other segments, Abhiram, sort of getting you interested to look at it closely right now?
I'm going to sound like a broken record here, but I still like what I first mentioned, which is financials is probably the space to be. And in that, I mentioned private sector banks. Historically, I've always spoken a lot about insurance companies, but they've kind of done really well in the last 3 to 6 months. But within that also, I think if you look at the last 3 months, maybe 1 or 2 names haven't done as well as the others. So I'll focus on those, the large caps. Overall, in the NBFC space, broadly, I think that, again, there are no red flags overall. So I'd still like the NBFC space, but like I mentioned earlier, I'd focus more on the larger names within the NBFCs. Now, where is the other space where there's some angle? I would think IT services still, I mean, especially after fall. I've noticed that every time there's a big fall, it's a good time to look at that. And the last bit is healthcare, both hospitals as well as diagnostics. Both of those areas look good to me still.
Actually, it's not so much a question, but you mentioned financials and you mentioned insurance, etc. Watch out for AMC companies as well. We reported yesterday that SEBI will put out that consultation paper on total expense ratio within a week. So, within a week could be, we don't know. I mean, it could be today, it could be next week. But it's happening, and it's supposed to come as a relief. Stocks did go up 3-4%. HDFC, AMC, Nippon, UTI, AMC, Aditya Birla. These are all names which could be in action once we get the new revised consultation paper, which is, as we reported, expected to provide relief. Abhiram, great to speak with you. Thank you very much for your time, and thanks for joining in. We'll take a break here. As always, we'll get you a check on what's happening in dealing rooms. Nimesh will get us that in D Street Chatter, and buy and sell calls, short-term trading ideas with our technical expert as well.